Real estate investing has long been praised as a surefire strategy for making your money work for you in wealth creation. The appeal of purchasing homes with a small down payment, watching their value rise, and reaping passive rental income while traveling the world is enough to entice anyone into the real estate market. But before you dive in, it's critical to understand the harsh realities of real estate investing. Spoiler alert, it's not all rainbows and sunshine. Welcome to Cashflow Canvas, where we teach lessons about investment and money-saving techniques. If you want to make your financial future better, make sure to like this video and subscribe to our channel for the latest updates. The substantial capital required for real estate ventures extends far beyond the property's asking price. The down payment stands as the first and most crucial consideration. When buying a home, a down payment of at least 20% of the purchase price is often necessary, especially to leverage attractive mortgage conditions. This down payment can be considerable, contingent on the value and location of your target property. For instance, in booming real estate markets with soaring property values, the required down payment can seem like scaling a mountain. This significant upfront cost can pose a formidable barrier for smaller investors, making it challenging to enter the real estate business, particularly when competing with deep-pocketed investors. While the 20% figure serves as a basic guideline, there are creative ways and financing options available to circumvent the hefty down payment requirement. However, these alternatives may entail their own terms, risks, or higher expenses. Hence, they aren't always a straightforward solution. Nevertheless, this is merely the tip of the iceberg. Investing in real estate also means committing to long-term financial obligations. Closing costs encompass charges for title searches, appraisals, and legal services. Funds for repairs and maintaining the property until it's fully rented are also necessary. These expenses can quickly accumulate and strain your initial investment. If a 20% down payment is mandated, the overall capital requirement will be significantly higher. Miscalculating this aspect can lead to severe consequences. Once you've invested in a property, you can't simply withdraw your money whenever you wish. Real estate constitutes a long-term investment commitment. This implies that if you're in a bind and require quick access to funds for an emergency or another investment opportunity, real estate might not be your best option. Your money is tied up in bricks and mortar, and quick retrieval isn't always feasible. Gaining access to equity through a bank loan can be a protracted and laborious process, requiring cash flow to support it. Even then, there are no guarantees. Selling a home takes time, and in certain situations, it can be painfully slow, lasting weeks or even months, even in a hot real estate market when houses seem to be selling rapidly. It's not as straightforward as erecting a for sale sign and waiting for offers to pour in. It involves a series of stages, starting from marketing your property to finding a buyer, negotiating a price, undergoing inspections, and finalizing the contract, which might fall through until everyone signs on the dotted line. If you urgently need access to your funds for an emergency or another investment opportunity, you might find yourself out of luck. When discussing real estate investing, property management is often glossed over as if it won't be a significant burden, but it can be. Being a landlord involves handling tenant issues ranging from late rent payments to maintenance requests, even extending to more serious matters like evictions. Finding dependable tenants and ensuring they take care of your property can be an ongoing challenge. Property maintenance can also be costly and time-consuming, especially when unforeseen problems arise. Those investing in properties across multiple locations face additional hurdles in managing these assets. Moreover, dealing with problematic tenants can be emotionally and financially draining. Legal disputes over issues such as lease violations or property damage can consume considerable time and money. While it's possible to devise systems and strategies to tackle these tasks and challenges, most landlords struggle, leading to stress and ultimately reduced profitability. Granted, real estate is less volatile than the stock market, featuring slower and more consistent price movements over time. Property values often appreciate gradually due to factors like location, economic conditions, and supply and demand. While real estate has historically appreciated, it's not immune to downturns. Changes in property prices typically depend on the location, meaning certain states and localities might experience significant declines while others grow. So it's not as simple as buying anywhere you want. Property values can drop during economic downturns or housing market crashes, leaving investors with properties valued lower than their initial purchase. These market fluctuations can derail your financial plans and jeopardize your returns. Leveraging or utilizing borrowed money to finance real estate purchases, alongside your down payment and credit, can amplify your returns when property values increase. The use of leverage is a hot topic when discussing reasons to invest in real estate. Large amounts of real estate can be controlled with relatively minimal down payments. It seems like a win, right? However, leverage also magnifies your losses if the market declines. For example, if you put $100,000 down on a $500,000 home and the home appreciates by 10%, you gain $50,000 in equity, a 50% return on your down payment. Conversely, if the property's value drops by 10%, you lose $50,000 of your $100,000 down payment. If the rental income from your property fails to cover mortgage payments and other expenses, you could find yourself in a precarious financial situation, unable to meet your obligations. Furthermore, excessive leveraging might restrict your financial flexibility, making it challenging to seize other investment opportunities or respond to unforeseen financial setbacks. Real estate investing is more than just finding the perfect house and watching the money flow in. It also involves immersing yourself in a labyrinth of laws and regulations that can be bewildering. Making it even more challenging is the fact that these regulations can vary significantly from one place to another. Zoning laws act as referees in real estate, determining what you can and cannot do with your property. Trying to convert your charming cottage into a nightclub in a residential zone might lead to penalties. There are numerous rules regarding how you must treat your tenants, depending on your property's location. These encompass limitations on rent increases, procedures for evicting troublesome tenants, and requirements for promptly addressing maintenance issues. Additionally, legal fees could silently eat into your profits. If you make a mistake and end up in a legal quagmire, those lawyer expenses can erode your hard-earned income quicker than you can say lawsuit. Real estate markets in certain areas can become oversaturated due to strong demand or speculative investment, leading to inflated home prices and a bubble. It's as if everyone suddenly decides to invest in real estate, causing property prices to soar faster than a rocket to the moon, resulting in an even bigger bubble. If you purchase real estate during such periods, you might end up overpaying, making it challenging to achieve a satisfactory return on investment. This scenario sets the stage for disappointment because generating a decent return on investment becomes arduous when starting out in the negative. Additionally, intense competition for desirable homes can trigger bidding wars, elevating prices and reducing your profit prospects. Then arises the question of whether this trend will persist or if we'll witness a decline. Despite these significant drawbacks, it's crucial to remember that real estate investing can be a profitable venture if executed correctly. Nonetheless, it's equally vital to approach it with eyes wide open, fully aware of the various risks and hurdles that lie ahead. Do your due diligence, seek guidance from experienced investors, and carefully evaluate your risk tolerance and financial situation before embarking on your real estate investing journey. As we conclude, I'd like to thank you for watching. I hope you found value in this video and learned something new, and I look forward to seeing you in our future videos. I would deeply value it if you could like this video and subscribe to our channel. Your support will help us to create more valuable content, and we can work together to secure your financial future. What are the key takeaways from this video that you can share in the comment section?